Hello, good morning to all. I hope that you have a great weekend. So today will be a brand new week ahead. So welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning to all. Thank you for joining me today. Today will be Monday, 25th of September. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so before we start, as usual, this will be our key takeaway. All right, so it's a recap of what happened last Friday, and as well as in terms of the market performance across the key asset classes, as well as economic data, and what data to look out for today. And lastly, the short-term technical outlook for the various asset classes that actually exhibiting interesting configuration. So let's recap of what happened last Friday. So let's start with the economic data releases first on the firstly on the Asia side of the story. Okay, so now let me share my screen. Okay, so now let's focus on the screen instead here. Okay, so over here, you all know that last Friday in the Asia session, we do have the BOJ, Bank of Japan monetary policy decision data release. So within the expectation, BOJ did not actually change their benchmark interest rate, still maintain at negative 0.1%. So they are the only key major central bank that's still maintaining negative interest rate policy in their economy. And also prior to this latest BOJ monetary policy, there was actually sounds that BOJ Governor Uda may started to actually give a bit of hawkish guidance during his press conference that was actually released at 2:30 p.m. Singapore time on last Friday. But however, he didn't actually sounded that hawkish, but he gave a much more balanced view about his take on the current inflationary situation in Japan. That means to sum up everything, he did mention that yes, Japanese inflation indeed starts to be more sticky on the upside. But however, he needs to BOJ. That means he needs BOJ in terms of BOJ view needs to see more substantial wages increases to have a much more knock-on impact on the inflationary situation in Japan. That means, i.e., he needs to see wages start to pick up much more substantially, which means that we got to only see towards the somewhere around next year April, where the Japanese corporation and their workers will actually negotiate. They call the spring wage negotiation process. So it seems to me that BOJ Yuda is actually kicking the can down the road, not committing of any his view on the current inflationary situation in Japan, despite the fact that inflation in Japan starts to tick up pretty significantly in the last 6 months or 7 months or so this year. But however, yes, even though he thumbs down speculation about rate hike, pressuring yen, that means you start to see yen weakness. But on Friday session, the dollar yen didn't actually manage to surpass its high, which is about 148.45. So it trade around a very tight range. All right. So that's for the BOJ press conference. How about the other economic data releases on last Friday? So on last Friday, there's this economic data releases, which is the US side of the story. Okay, sorry, pardon me. Over here. Yep. So this is the flash PMI data for September. So for the manufacturing one, it's still in contractory mode. This US manufacturing PMI flash for September is 48.9, slightly above consensus of 48, but it's still in a contractory mode. But what's alarming over here is the services, because as you all know that the US economy is more services oriented, and the bulk of the GDP growth in US is coming from the services side of the sector rather than the manufacturing side. So for the services PMI, it actually came in below expectation. Okay, still in expansionary mode, 50.2, but expecting is 50.6, and also deep down below August figure of 50.5. So it came in at 50.2, below expectation and below August figure of 50.5. So if you look at the trend of the services PMI in US, in fact, it starts to actually growth starts to decelerate since April this year. All right. So all in all, right, what we could see over here is that, do not forget, in the if you look at the media report, if you look at economic estimate, most of them are still looking out for what I call soft landing in US. But however, if we start to see the services PMI start to decelerate, the soft landing seems to be a bit over optimistic. And if you look at the higher for longer interest rate maintained, that's been set up by the US Federal Reserve based on their latest FOMC meeting that was concluded last week, it actually will causes the US cost of borrowing to take up much higher. So that's already pretty much prevalent in the US 10-year Treasury yield that actually rose to a level that is the highest since 2004. So right now, it will surpass 4.6%. So if you look at the US 10-year Treasury yield over here very quickly, okay, this is the yield. Okay, so last Friday it cleared plus 4.46%, so clearly surpassed last year high of October 2022. So the next resistance right now will be 4.9%. So if this US Treasury is going to take up much higher, definitely for sure, it will actually pressure US equity as well. So now let's take a look at recap of what happened last Friday on the US equity story. So you look at the S&P 500 over here. Okay, so it's a pretty much mixed bag over here. The technology sector managed to actually outperform, with the top performer is the semiconductor, Nvidia up 1.45%. So that's actually on the Friday performance. So an Apple positive 0.5%. But however, some of the mega cap stock like Tesla doesn't do that well, negative 4.2%. And more importantly, the financial sector also underperformed on last Friday. So overall, last Friday performance, right, if you sum it up, it's rather mixed bag. The SPX actually is down negative 0.2%, which is S&P 500. The Nasdaq outperformed by only 0.05%, positive 0.05%, thanks to only Nvidia and Apple. The Dow Jones actually underperformed with negative 0.31%, and the Russell 2000 also underperformed with negative 0.3%. So for the week, the S&P 500 actually down negative 2.9%. The Nasdaq 100 was the worst performer for the week last week, ending with negative 3.3%. The Dow Jones Industrial Average down negative 1.89%, and the worst performer is the Russell 2000, negative 3.82%. So let's immediately now take a look at the weekly chart of the cash market of this major benchmark US indices. Also, let's start with the Russell 2000 first. So it's the weekly for the Russell 2000. So Russell 2000 over here, this is the worst performer in the worst performer, and also its worst performing week in the last 3 weeks, and now approaching very close to the lower boundary of this symmetrical triangle range configuration. So all in all, right, if you look at the Russell 2000, it didn't shape higher high. In fact, it started to shape similar high over here. And right now it's inching very close to a key support level. So a breakdown below this key support level potentially could actually unleash another round of major down move. So if you look at the Russell 2000, why I show you Russell 2000, those who actually join me in my daily dose of market insights early part of the week, Russell 2000 is important if you were to actually analyze the US economy. And do not forget, stock market benchmark indices always tend to be a leading indicator of economic cycle. And Russell 2000, the component stock inside Russell 2000 derive their revenue mainly from inland, that means the US economy, rather than internationally, like the S&P 500 or the Nasdaq 100, where Apple revenue is dependent on globally. But if you look at the Russell 2000 component, the price action of the Russell 2000 component indicate to us that we are actually on the brink of a major bearish breakdown. That means if this scenario plays through, and if the Russell 2000 has a leading element in terms of economic growth, it tells us that the US economy, in fact, is not in a soft landing scenario, but rather more skewed towards a hard landing scenario instead. All right, so that's something to keep an eye watch out for. So even though this is the Russell 2000, let's take a look at the S&P 500, which is deriving their revenue flows from internationally. Also doesn't look quite good as well. So if you look at the last week performance, was actually the worst weekly performance since March this year. So March performance, this was actually during the onset of the US regional banking crisis. Then how about the Nasdaq 100? Okay, pretty similar as well. The worst weekly performance since March. All right. Dow Jones. Okay, not that bad, but technically it managed to break down below a ascending support level that is in place since October low. Okay, support tested 1 time, 2 time, 3 time, 4 time, last week broke, and right now trying to test the 200-day moving average. So bear in mind, TradingView, we are able to overlay a different time frame moving average with a chart that I want to analyze. So what I do is that this is a weekly chart, weekly time frame overlay with the 200-day moving average. So overall, it's now trying to test the 200-day moving average, but however, technically it already broken down below a ascending support level. That is pretty much crucial. Why? Because the ascending support level managed to help the previous higher low that was in place since 13th of October. So indicating to us that this move over here since 13th of October rebound, more or less, it may have ended. That means, i.e., this whole rebound here is just a corrective rebound within a major downtrend phase that has not ended yet for the Dow Jones Industrial Average. So something to actually keep an eye watch out for on the major US stock indices. If you look at the weekly chart that actually ended last week, it seems more skewed towards the negative side rather than the positive side of the story. All right, so now that's for the update for last week. So now going forward, what are the things to look out for today in terms of economic calendar? So for the economic calendar wise, today wise, if you look at the economic calendar, is rather quiet. So the only one that I look out for Asia will be Singapore inflation rate data out at 1 p.m. Singapore time. Then stretching to US itself is not, US is currently nothing important, but however for Eurozone, there is actually the, we call it business sentiment climate, which is out in Germany at 4 p.m. Singapore time later. All right, and also we have a couple of Eurozone officials speech as well at 9 p.m. Singapore time. Okay, that's ECB officials, we call it press, public speeches. All right, so that is something to take note of. And most importantly, right now over here is that this week itself, US is pretty much crucial. Why? Because that is on the brink of a potential government shutdown. This is not a dead limit; it's more potential government shutdown, where because US itself operates in a different fiscal year, so their current government new fiscal year starts on 1st of October, which is next week. So there's right now some squabbles between the House Republican to actually technically do not want to pass certain spending bill. So right now they are actually squabbling. So if they could not actually get their things right, or get their, what you call it, brinkmanship right, potentially various bills could not be passed before 1st of October. That means, i.e., there could be a temporary period where various US government agency may not be able to operate. And the risk over here is that if they don't be able to operate, they could actually dent US consumer sentiment. So it's not as serious as the debt limit, the debt ceiling crisis that was seen earlier in April, May this year. So if there's going to be a temporary US shutdown by various government agency, for sure it will actually have a negative feedback loop into the consumer sentiment. And on top of that, it could actually impact the stock market as well, given the fact that the US Treasury yield going to inch much higher. So this is something to look out for as it's going to play out throughout the whole of this week between the negotiation between the House Republicans. All right, so now with that, let's us take a look at the short-term technical outlook. Yeah, so for the short-term technical outlook, let us start with the major stock indices first. Pardon me. Okay, so over here, let us start with the indices. Okay, let us start with the US one. Okay, for Dow Jones. Okay, Dow Jones Industrial. Pardon me, Nasdaq 100 first. Okay, Nasdaq 100. So Nasdaq 100, last Friday, we do have a bearish condition, short-term bearish condition, with a 14,910 key short-term pivotal resistance to actually maintain that short-term bearish condition on the Nasdaq 100. So this level was actually not being surpassed. In fact, there was a rebound on last Friday, but this rebound managed to stage a bearish reaction, close right below the 14,910 level. So still maintaining that short-term bearish condition on the US Nasdaq 100, 14,910. As long as 14,910 is key short-term pivotal resistance is not surpassed, the US Nasdaq 100 may risk to see a further down leg towards the next near-term support at 14,560, a break below 14,560, which is the 18th of August low, exposes the next support level at 14,370 slash 14,300 on the US Nasdaq 100. All right. So for the Dow Jones Industrial Average, the rebound itself was less minute over here due to the fact that due to the underperformance of the US banks, which has a higher weightage inside the Dow Jones Industrial Average, which we in our platform we call it US Wall Street 30. So with that, we will have actually have a tightened key short-term pivotal resistance for today at 34,180 to maintain that short-term bearish condition that we have on last Friday, looking for a test on a further potential down leg to test the next support level at 33,815 slash 33,760, which is also the 200-day moving average, and as well as the swing low area over here from 30th of June to 10th of July. But however, if we start to see a clearance above 34,180, then this short-term bearish condition bias will be invalidated to see a much more pronounced corrective rebound to test the next resistance level at 34,370 on the US Wall Street 30 index. All right, now the German 30. So for the German 30 over here is that the rebound on last Friday managed to react off the short-term pivotal resistance that we have to maintain that short-term bearish condition bias on the German 30 index, which is at 15,570. So still maintaining that short-term bearish condition bias, given the fact that this 15,570 key short-term pivotal resistance is not surpassed on last Friday, we saw the 200-day moving average. So still maintaining that short-term bearish condition, looking for a retest on the intermediate support at 15,470. A break below 15,470 exposes the next support level at 15,320. However, a clearance with an hourly close above 15,570 will actually invalidate this short-term bearish condition bias to see a much more a steeper corrective rebound to retest the 20th of September swing high area, and as well as this intermediate the next resistance zone, which is at 15,780 slash 15,810 level on the German 30 index. All right, so now going on will be the Hong Kong 33. Still recall that Hong Kong 33 last Friday, we actually have a bullish bias to actually pay a squeeze up to retest 18,830 slash 18,150. So right now, what we could see over here is that the Hong Kong 33 index going to actually have a negative reaction off at 18,060, 18,000. This high over here, 18,160, which is so this descending channel resistance level as well, didn't actually have a proper bullish breakout and reacted below it. So for sure today will have a bearish bias over here using 18,060 level as my key short-term pivotal resistance for today, given the fact that the technical element has now turned bearish in the shorter term, with the RSI exiting from the overbought level and breaking below the 50 level, has yet to hit the oversold region itself over here. Okay, so overall what we could see over here, it actually also went down below this resistance level as well. Formerly support, breakout, now turns back into a resistance again. So for sure, right now the short-term momentum has starts to revert back to more on the bearish side of the story. So using 18,060 as a key short-term pivotal resistance today, flip to a bearish condition bias to retest the 21st of August swing low area at 17,560 level. 570 level, pardon me. But however, if you have a clearance or an hourly close later above 18,060 key short-term pivotal resistance, then this short-term bearish condition bias will be invalidated to see a squeeze up to retest the 15th of September swing high area, minor swing high area, followed by this swing high area that is 5th of September and 7th of September resistance zone 18,370 / 18,550 on the Hong Kong 33 index. All right, so now flipping to a bearish bias condition, given that short-term momentum has turned negative, 18,060 will be my key short-term pivotal resistance for the Hong Kong 33 index for today. Now moving on will be the FX space. So let's take a look at the FX story first. Over here, okay, where is the FX story? Okay, pardon me. Let me share with you all the FX heat map. Okay, 25th of September, rolling 1 month performance. So this rolling 1 performance, what we could see over here is that the dollar still continue to strengthen pretty much strongly against the European currency, especially against the sterling, against the Swiss franc. The Japanese yen start to move up slightly. Later I'll show you the dollar yen chart. The euro pretty much sideways on last Friday, but however, dollar strength is pretty much minute, not so strong against the CNH, the Aussie, the Kiwi, the CAD, and against the Sing dollar. All right, so now let's take a look at the dollar yen in the short-term chart. So for dollar yen over here, okay, this dollar yen. So dollar yen continue to actually, yes, this was the BOJ announcement. Then after that came down. BOJ governor speak, but refused to break above last week high, which is at around 148.40. Okay, so we will have this key medium-term pivotal resistance at 48.85. So what's 48.85, right? If you go to the daily chart over here, okay, it's actually this level here. All right, this level here, and also the upper this level, the swing high, the medium-term swing high of 31st of October last year and 1st of November last year, and also the upper boundary of this potential bearish ascending wedge configuration that is still evolving since 24th of August low this year, which is the upper limit at 48.85. All right, so with that, right, we will be still using this 48.80, pardon me, sorry, still using this 48.85 level as my key medium-term pivotal resistance for today. And if you look at the momentum on the hourly chart as well, doesn't seem to look that great over here. Okay, continue to shape that bearish divergence, okay, sloping downwards, indicating to us that the momentum has the bullish momentum has started to kind of ease off as well. So with that, 148.85 will be my key medium-term pivotal resistance level. Definitely for sure, we need to have a breakdown below 147.50, then we could start to actually see a more substantial corrective decline to retest close to the 11th of September swing low area at 146.30 level. All right, so it needs to actually break down below the 147.50 level, which was last Friday low as well, and also right now coming close to the 20-day moving average. All right, however, if we start to see a clearance above 148.85, then this what I call persistence uptrend in the dollar yen should resume to see a squeeze up towards the major resistance at 149.80 / 150 level. So this level was actually a level that actually triggered MOF instruction last year to actually instruct BOJ to actually buy the yen, sell the dollar. Okay. Then now going forward, what will be the European currency then? So over at the European currency over here, let me immediately share the, okay, whoops, not here. Where's the European currency? Okay, where is the chart of the, okay, over here, pardon me. So let's start with the sterling first, which is the weakest currency against the dollar. So the sterling dollar going to inch downwards over here. We tested Thursday low, but didn't break. Thereafter, it traded sideways during the US session on last Friday. So we will actually have a tightened key short-term pivotal resistance for today at 123.10 to maintain that short-term bearish condition bias towards the next support level at 121.95, followed by 21.50, which is the lower boundary of this medium-term descending channel that is in place since the high of 14th of July this year. All right, but however, if we start to see a clearance with an hourly close above 123.10, then this short-term bearish condition bias will be invalidated to see the start of a corrective rebound to retest the 200-day moving average, acting as a resistance also, and converging with the former minor range resistance turns into a pullback resistance, minor range support turns to a pullback resistance, converging closely with 200-day moving average at 1.2445. So that's for the sterling dollar. So how about for the euro dollar? So for the euro dollar over here, similarly, last Friday it actually traded sideways, but it did manage to actually surpass a new high that is broke above last Thursday high. So we do not want to use last Thursday high as my key short-term pivotal resistance. So still maintaining it at 107.07/0740. So that also the 200-day, that also confluence with the 20-day moving average. So using 107.40 as a key short-term pivotal resistance level, still maintaining that short-term bearish bias. A break below 106.35 potentially could expose the next support level at 105.85 on the euro dollar. But however, if we start to see a clearance above 1040, then we could see a squeeze up potentially to test the next resistance at 1070. Then also potentially a break above it could actually test the 200-day moving average close to this swing high area of 4th of September at 108.80 level, which is so close to the 200-day moving average, 1080 level. Okay, pardon me. So now one more currency pair I want to share with you all will be the sterling yen. Yeah, on the sterling yen. So look at the sterling yen over here is for sure is trading in a very clear short-term downtrend ever since the breakdown of this support level on 21st of September over here. So with that, I'll be using 182.50 as my key short-term pivotal resistance level. If you look at the RSI also going to slope downwards below the 50 level, so indicate to us that short-term downside momentum still remains intact. 182.50, pardon me, my key short-term pivotal resistance. As long as this level is not surpassed, the sterling dollar potentially could continue to evolve within a series of lower high and lower low in this short-term bearish downtrend towards the next support level at 180.60 level. However, a clearance above 182.50 level will actually start to invalidate this short-term bearish condition to see a squeeze up or a corrective rebound to actually retest the 20-day moving average, acting as a resistance, converging with the swing high of 14th of September and 15th of September at 183.80 level. All right, so with that, so that's pretty much sum up on the FX space over here. So that's all we have for today's daily dose of market insights. So we've come to the 30-minute mark. Yeah, come to 30-minute mark. So with that, I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.